ExamPrep.School. Vermont Producers Property Insurance Exam, exam code SERIES 14-41. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Auto insurance, business owner's policy, commercial package policy, dwelling policy, general insurance, homeowner's policy, insurance regulation, other coverages and options, property insurance basics. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under Vermont insurance regulation, within how many calendar days must the Department of Financial Regulation approve or deny a completed resident producer license application? A. 15 calendar days. B. 45 calendar days. C. 30 calendar days. D. 60 calendar days. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is C. Under Vermont law, the Department of Financial Regulation must approve or deny a completed resident producer license application within 30 calendar days after receipt. Reason A is not correct. Specifying 15 days is too short because the statute allows a full 30 calendar days. Reason B is not correct. Specifying 45 days exceeds the statutory 30-day requirement. Reason D is not correct. Specifying 60 days is incorrect, since the statute sets a 30-day deadline. Question 2. Under Vermont's non-resident producer reciprocity provisions, a producer licensed in another state may obtain a Vermont license without examination if which condition is met? A. The producer holds a surplus lines license in their home state. B. The producer establishes a principal place of business in Vermont. C. The producer completes Vermont-specific pre-licensing education. D. The producer's home state provides reciprocal licensing privileges to Vermont producers. The correct answer is D. Reciprocity provisions allow non-resident producers to obtain Vermont licenses without examination when their home state grants reciprocal privileges to Vermont licensees. Reason A is not correct. Holding a surplus lines license in the home state is unrelated to producer reciprocity eligibility. Reason B is not correct. Establishing a principal place of business in Vermont is not required for non-resident reciprocity. Reason C is not correct. Vermont-specific pre-licensing education is not mandated for non-resident producers under reciprocity. Question 3. What is the maximum duration for which a temporary insurance producer license may remain in effect in Vermont? A. 90 days. B. 60 days. C. 120 days. D. 180 days. The correct answer is A. Vermont issues temporary producer licenses that remain valid for a maximum of 90 days under specified circumstances. Reason B is not correct. Specifying 60 days is too short since the statutory limit is 90 days. Reason C is not correct. Specifying 120 days exceeds the maximum period allowed under Vermont law. Reason D is not correct. Specifying 180 days is incorrect, as the law caps the temporary license at 90 days. Question 4. How many additional continuing education credit hours, including ethics hours, must Mary complete before renewing her Vermont insurance producer license? A. 4 additional credit hours, including at least 1 ethics hour. B. 4 additional credit hours with no further ethics requirement. C. 3 additional credit hours, including at least 1 ethics hour. D. 3 additional credit hours with no further ethics requirement. The correct answer is A. The correct answer is based on the Vermont mandate of 24 total credit hours with at least 3 ethics hours every biennial renewal. Mary has completed 20 hours and 2 ethics hours, so she needs 4 more credits and at least 1 more ethics hour. Reason B is not correct. Fails to account for the minimum ethics hour requirement specified by Vermont regulations. Reason C is not correct. Underestimates the total credit hour requirement by 1 hour. Reason D is not correct. Underestimates both the total credit hour and ethics hour requirements. Question 5. Which of the following actions may the Vermont Insurance Commissioner take when issuing a cease and desist order under state insurance law? A. Require an insurer to adopt new underwriting standards for future policies. B. Levy a monetary penalty for regulatory violations without notice. C. Suspend a producer's license without conducting a hearing procedure. D. Prohibit an insurer from continuing a specified unfair claim practice. The correct answer is D. The correct answer is that the Commissioner may issue orders to prohibit continuation of specified unfair claim practices under cease and desist authority. The other options describe separate regulatory powers, such as imposing fines, license suspension, or rate regulation, that require distinct procedures and are not executed via a cease and desist order. Reason A is not correct. Mandating underwriting standards falls under rate and form regulation, not the scope of a cease and desist order. Reason B is not correct. This option describes administrative penalty authority, which is distinct from cease and desist orders and requires a separate enforcement action. Reason C is not correct. License suspension involves a different process and cannot be executed directly through a cease and desist order. Question 6. Under Vermont insurance statutes, which of the following best describes the Commissioner's authority during a financial condition examination of an insurer? A. Restrict document review to materials maintained at the insurer's principal office. B. Conduct examinations solely with insurer's written approval at least 60 days prior. C. Require officers, directors, and employees to testify under oath and produce records. D. Delegate all examination authority to external auditors without direct oversight. The correct answer is C. The correct answer reflects the Commissioner's power to compel testimony under oath and require production of books and records during an examination of financial condition. The other options misstate consent requirements, geographic scope of inspection, and delegation limits. Reason A is not correct. The Commissioner may inspect records wherever they are maintained, not only at the principal office. Reason B is not correct. Vermont law does not require the insurer's written approval or a 60-day waiting period to conduct examinations. Reason D is not correct. While examiners may assist, the Commissioner retains oversight and cannot fully delegate examination authority without supervision. Question 7. After being served with a notice of a Vermont market conduct examination outlining the records and personnel to be reviewed, an insurer believes the defined scope is overly broad. Under Vermont market conduct investigation regulations, what action must the insurer take and within what time frame? A. Send a general letter to the department within 10 business days, stating disagreement with the scope without identifying particular records or personnel. B. Attend the scheduled entrance conference and orally object to the defined scope in the presence of the examiner, requesting that it be narrowed. C. File a petition in the Vermont Superior Court within 60 days of service, alleging that the department exceeded its statutory authority in defining the examination scope. D. File a written petition with the Commissioner within 30 days of service, identifying specific records or personnel to be examined, and providing legal justification for modifying the scope. The correct answer is D. The correct answer requires filing a written petition with the Commissioner within 30 days that specifies the precise records or personnel in dispute and provides the legal basis for narrowing the scope, as mandated by Vermont's market conduct examination regulations. Reason A is not correct. A general letter within 10 business days does not satisfy the need to identify specific records or personnel and lacks required legal justification. Reason B is not correct. Oral objections at the entrance conference fail to comply with the requirement for a timely written petition specifying contested items. Reason C is not correct. Petitioning the Superior Court bypasses the administrative petition process and misses the 30-day filing requirement with the Commissioner. Question 8. Which of the following is not a required component of an adverse action notice under the Fair Credit Reporting Act when a consumer's application for insurance is denied based on information in a consumer report? A. The name, address, and telephone number of the consumer reporting agency that supplied the report. B. The date on which the adverse action was taken. C. A statement informing the consumer of the right to obtain a free copy of the report within 60 days. D. A clear statement of the consumer's right to dispute the accuracy of information in the report. The correct answer is B. The Fair Credit Reporting Act mandates that adverse action notices include the furnishing agency's contact details and inform consumers of their rights to free report copies and dispute procedures. It does not require stating the specific date the insurer took the action. Reason A is not correct. Providing contact information for the consumer reporting agency is required so the consumer can request and review the report. Reason C is not correct. Notifying the consumer of the right to obtain a free copy of the report within 60 days is expressly mandated. Reason D is not correct. Including a statement of the right to dispute report content is a core element of adverse action notices under the Act. Question 9. Under the USA Patriot Act's anti-money laundering requirements for insurance producers, what is the minimum frequency at which the producer must complete designated AML training? A. At least once every calendar year. B. Once every 2 years. C. Once every 3 months. D. Only when first appointed as an insurance producer. The correct answer is A. The Patriot Act's regulations require insurance producers to undergo anti-money laundering training at least annually to ensure ongoing awareness of red flags and compliance procedures. Reason B is not correct. A biennial schedule is too infrequent to meet the Act's annual training mandate. Reason C is not correct. Quarterly training exceeds the minimum requirement, which is annual. Reason D is not correct. Training only at initial appointment does not satisfy the ongoing annual requirement. Question 10. After her conviction for bank fraud under federal law, a Vermont property insurance producer learns that under 18 U.S.C. 1033, she must obtain a waiver before resuming any participation in insurance activities. Which action should she take to initiate the waiver process? A. Submit a petition to the Vermont Insurance Commissioner showing proof of rehabilitation. B. File a written waiver application with the primary federal financial institution regulatory agency. C. Deposit a federally required surety bond with the National Association of Insurance Commissioners. D. Notify the Vermont Department of Financial Regulation and pay a reinstatement fee within 30 days. The correct answer is B. The waiver process under 18 U.S.C. 1033 requires the individual to apply in writing to the appropriate federal financial institution, regulator that oversees entities offering insurance services before resuming activities. Reason A is not correct. Submitting proof of rehabilitation to the state commissioner does not satisfy the federal waiver requirement under 18 U.S.C. 1033. Reason C is not correct. No surety bond deposit with NAIC is mandated by 18 U.S.C. 1033 for criminal conviction waivers. Reason D is not correct. Notifying the state and paying a fee does not initiate the federal waiver process required by 18 U.S.C. 1033. Question 11. In property insurance, at what point must an insurable interest exist for the insured to recover for a loss? A. At policy inception. B. At the time of loss. C. At the time of application. D. At policy renewal. The correct answer is B. The correct answer is that an insurable interest in property insurance must exist at the time of loss. Unlike life insurance, property policies require interest only when the loss occurs. Reason A is not correct. An insurable interest at policy inception is not required. Property insurers focus on the time of loss. Reason C is not correct. The time of application is not relevant for establishing insurable interest in property policies. Reason D is not correct. Policy renewal is not the point at which insurable interest is required according to property insurance principles. Question 12. Which function of the law of large numbers is most directly utilized by property insurers? A. Eliminating all forms of underwriting risk for catastrophic events. B. Ensuring immediate claim payments to mitigate policyholder losses. C. Projecting probable loss frequency through analysis of homogeneous exposure units. D. Reducing moral hazard by imposing deductibles and copayments. The correct answer is C. The law of large numbers enables insurers to predict probable loss frequency by using statistical data from many similar exposures, improving premium accuracy. Reason A is not correct. The law of large numbers does not eliminate underwriting risk for catastrophes. Reason B is not correct. Immediate claim payments are not related to the statistical basis of the law of large numbers. Reason D is not correct. Moral hazard control is achieved through policy provisions, not the law of large numbers. Question 13. A risk manager evaluates exposures for a regional restaurant chain and identifies the following: a potential liability lawsuit from a slip and fall incident at one location, a promotional discount campaign that may boost sales or reduce margins, investing surplus funds in foreign currency with possible exchange gains or losses, and opening a new franchise that could generate profits or incur losses. Which of these exposures exemplifies a pure risk? A. Opening a new franchise that could generate profits or incur losses. B. Promotional discount campaign that may boost sales or reduce margins. C. Investing surplus funds in foreign currency with possible exchange gains or losses. D. Potential liability lawsuit from a slip and fall incident at one location. The correct answer is D. A potential liability lawsuit is a pure risk because it can only result in loss outcomes, legal costs or damages, and offers no opportunity for gain, whereas the other exposures involve speculative possibilities of profit or loss. Reason A is not correct. Expanding into a new franchise is a speculative risk due to its profit or loss nature. Reason B is not correct. This describes a speculative risk because it can result in either increased revenue or reduced margins. Reason C is not correct. This is a speculative risk since foreign currency investments carry both gain and loss potential. Question 14. Which of the following best defines an alien insurer under U.S. regulatory classification? A. Domiciled and operating in the same state. B. Domiciled in one U.S. state but licensed in another. C. Domiciled outside the United States. D. Organized as an unincorporated insurance exchange owned by subscribers. The correct answer is C. The correct answer is domiciled outside the United States, which classifies an insurer as alien under U.S. regulations. Reason A is not correct. That describes a domestic insurer which is incorporated and operates in the same state. Reason B is not correct. That describes a foreign insurer which is incorporated in one U.S. state and licensed in another. Reason D is not correct. That describes a reciprocal exchange, not a classification based on domicile. Question 15. Which of the following features distinguishes a mutual insurance company from a stock insurance company? A. Issues shares of stock to raise capital. B. Is owned by policyholders. C. Pays dividends to public shareholders. D. Raises capital primarily through bond offerings. The correct answer is B. The correct answer is ownership by policyholders, which is the defining characteristic of a mutual insurance company compared to stock ownership by shareholders. Reason A is not correct. Stock companies issue shares of stock, whereas mutuals do not issue stock. Reason C is not correct. Mutual companies pay dividends to their policyholders, not to public shareholders. Reason D is not correct. Mutuals do not typically rely on bond offerings for capital. They use surplus from premiums. Question 16. A Vermont contractor is evaluating coverage options and learns that a reciprocal insurance exchange is an unincorporated association of subscribers. She wants to know which party is directly liable for paying claims under policies issued by the exchange. Given the structure of a reciprocal insurance exchange, which party assumes the financial responsibility for covered losses? A. The attorney-in-fact who managed the exchange. B. A board of governors elected by subscribers. C. All subscribers reciprocally sharing risk. D. A centralized capital pool maintained by the exchange. The correct answer is C. In a reciprocal insurance exchange, subscribers exchange contracts of indemnity among themselves. Each subscriber is directly liable for claims on a prorated basis, while the attorney-in-fact merely administers the exchange. Reason A is not correct. The attorney-in-fact administers and manages the exchange but does not assume the policy risk. Reason B is not correct. There is no board of governors in an unincorporated reciprocal exchange responsible for claims payment. Reason D is not correct. Reciprocal exchanges do not maintain a single capital pool that alone assumes loss liability. Question 17. Which of the following is not one of the four essential elements of a legally binding insurance contract? A. Utmost good faith. B. Competent parties. C. Legal purpose. D. Consideration. The correct answer is A. The four essential elements are offer and acceptance, agreement, consideration, competent parties, and legal purpose. Utmost good faith is a guiding principle but not a contract element. Reason B is not correct. Competent parties is fundamental for enforceability. Reason C is not correct. Legal purpose ensures the contract's object is lawful. Reason D is not correct. Consideration represents the value exchanged and is a required element. Question 18. In a property insurance contract, the insurer's consideration consists of which of the following? A. Payment of the insured's premium. B. Promise to indemnify against covered losses. C. Provision of claims adjusting services. D. Filing of the policy application. The correct answer is B. The insurer's consideration is its promise to indemnify the insured for covered losses. Premium payment is the insured's consideration. Reason A is not correct. Premium payment is the insured's consideration, not the insurer's. Reason C is not correct. Claims adjusting services are administrative and not contractual consideration. Reason D is not correct. Submitting an application is part of formation, not consideration. Question 19. A small business owner applied for commercial property insurance, stating that the building's roof was replaced 2 years ago. The policy also contained a warranty requiring the installation of an approved security system, which the owner did not maintain. After a theft occurs, the insurer discovers both the misrepresentation and the warranty breach. Under contract law, what best describes the insurer's ability to deny the claim based on these two findings? A. The insurer can void the policy due to the misrepresentation only if the misstated roof age was material, but can deny the claim for the security system breach regardless of materiality. B. The insurer may not deny any claim based on the roof age misstatement once the policy is enforced, but may enforce the security system warranty strictly. C. Both the misrepresentation and the warranty breach must be shown to be material to the risk before any claim denial is permitted. D. Only fraudulent misrepresentations allow denial of claims, whereas unintentional breaches of warranty do not support denial. The correct answer is A. The correct answer is that insurers may rescind or void coverage for misrepresentations only if the fact was material to underwriting, whereas warranty breaches permit strict enforcement and claim denial regardless of materiality. Reason B is not correct. This option incorrectly suggests that misrepresentations cannot lead to denial if unintentional, ignoring materiality requirements for misstatements. Reason C is not correct. This option wrongly applies a materiality requirement to warranties, which are absolute obligations irrespective of material impact. Reason D is not correct. This option misstates that unintentional warranty breaches cannot support denial, whereas warranties impose strict compliance. Question 20. In property insurance, actual cash value is most accurately determined by which calculation? A. Replacement cost minus functional obsolescence. B. Replacement cost minus physical depreciation. C. Replacement cost minus economic obsolescence. D. Replacement cost minus market value adjustments. The correct answer is B. The actual cash value formula subtracts physical depreciation from the replacement cost to reflect the property's diminished value at the time of loss. Reason A is not correct. Functional obsolescence refers to outdated design or features, not physical depreciation. Reason C is not correct. Economic obsolescence concerns external factors, not the property's physical wear. Reason D is not correct. Market value adjustments reflect market conditions, not the depreciation-based ACV calculation. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.